Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for another daily cryptocurrency market update video. We have, as always, got a lot to get into. Yesterday was interesting. One of the main events that took place yesterday, of course, was Apple's earnings. Now, I think it's Apple and Microsoft make up the majority of the S&P, and the fact that earnings beat expectations. I think the S&P and generally the equity market in the US will potentially enjoy today. We can see the futures market's up, but it's still very early days. The equity market is probably the hardest, certainly the US equity market is probably the hardest market to work out right now. We've looked at this kind of resistance. You've come into resistance for the S&P and broadly, this is not amazing. Very double toppy here. At the same time that you've come into support for the dollar down here. And you can see you're kind of forming this. And of course, resistance for gold and resistance for Bitcoin. Now, I'm a lot more sure on gold and Bitcoin to the upside than I am the US equity market because there's a whole load of variables that go into that. The US equity market in some ways is kind of synced in with the US dollar. I don't mean in terms of, their synced in is probably not the right word, in terms of they move together, but they have a similar basket of variables that affect them, and the economy is a massive one if you're talking about US equity. Certainly the likes of Amazon, which is dependent on you guys, retail sales. And if there's a dampening of that, the dollar may be weak and equities may be weak. However, I think what's going on right now is people are and have lost a great amount of trust in the US and banking generally. With the dawn of the internet, it's really awoken us up to, or it's always been the case, but people have really become awake to the Ponzi scheme that we're all subject to, which is the fiat currency systems. They are an ideology, they are nothing more, and they are essentially the governing factor of most of our lives, the majority of our lives. This is a report. 48% of US adults are worried about leaving their money in banks, CNBC. Pre-market banks, you can see banks were getting hit really hard yesterday. And of course, we had Panko or whatever it was called really sell off yesterday pretty hard. We also looked at a really interesting thing, which was true inflation that comes up at 3.8, but that's something we'll deal with next week. Today, you have non-farm payroll at 1:30 p.m. UK time. I think that's 8:30, I believe, in the US, or certainly Washington. And this is going to be interesting because markets are driven by rates at the moment. Rates are what's driving the economy. It's what's doing everything. The Fed is the great manipulator of everything. When it comes to markets, they are the source of liquidity. We did a comparison where we actually looked at people saying, and this is just my take on it, that 2008, we've had a worse banking crisis, and my argument to that is, well, I don't think we have, because if you look at the amount of money that there was in 2008. Or let's just do 2009 to be generous. Compared to today, money doesn't hold the same kind of value as it did back in 2008. So I don't think this is worse than 2008, but I do think it's bad, and I think it's going to get worse. And I think this is, and I was listening to something from Hugh Henry this morning, who I'm really hoping to get on the show soon, talking about this kind of, search, you're in this kind of like, you're in the desert and you're looking for water. And the water is an analogy for yield. And this is why we're seeing money market funds get huge bids. Money markets holding its record 5.31 trillion in week ending May, up $47 billion in 1 week, up $100 billion in 2 weeks. The bank run is accelerating. We're seeing a flight from banks into alternatives. I don't think stocks are an alternative, but I think Bitcoin and gold are. And I think this is why they're doing well. I think Bitcoin and gold, certainly in an acceleration of bank failings, are going to do well. Ultimately, and we've maintained this stance since the start of the year, I'm bullish on the crypto space. And at every single point of resistance, I'm met with speculation. And we've proven ourselves thus far, and I think we're going to continue to do so. I don't think this is particularly bearish. I think 30K was always supposed to be expected as resistance. That's exactly what it has been. It's not been particularly harsh resistance. There still is a chance that you run to 25K and bounce. That would still be a bullish scenario for us. Ultimately, it's very common. And actually, if you look at the NASDAQ, just as a quick example, you can look at this sort of bounce for the NASDAQ here off this trend line. Rather messily drawn trend line, if I do say so myself. There is still the possibility that you come back and retest the neckline break and then see upward continuation, but you could be set for upward continuation. Ultimately, the mantra that we're kind of preaching at the moment is being long and strong. I think that is I think for most investors, I'm not necessarily a hodler, although I do believe in these cryptos over the long term. As somebody with a little bit of market experience, I do try and play the markets. And I'm not interested in short calls, like small-time calls that are zoomed in. I'm more interested in capturing the big trends. And we were late to this one. We only got out here. All the videos are on YouTube and entered literally here. So we're the best. I wish we got out at 69K and we'd have had a bit more money. I was very fortunate that I bought a lot of my altcoins down here and actually in the March 2020 and, of course, prior. But I ultimately think that we're in an uptrend now. And I think that rates are, and this is why non-farm payroll is so important, about to go sideways. And you can go and look at what happens with the 2-year yields topping and rates going sideways. Today's going to be telling because 2-year looks weak to me. However, it's all data dependent. So if you get a under projection, and it's the labour market has been red hot from a statistical point of view. Whether that's the actuality of it is a completely different story. If you aren't convinced that the Fed and the government lie to you by now, guys, you are living in a dream world. You have eaten or drank the Kool-Aid that they've given you, because your government 100% cannot be trusted, whether that's UK, whether that's US, across the board, in my opinion. And they are, anyway, I don't want to go down that kind of rabbit hole. But since 2021, this is not to mention any of the stuff that we've all gone through over the past 3 years, and there's a lot of interesting things coming out about that. First, they said we won't raise rates until 2024. Then rates hit a 16-year high this month. So the last time, of course, was 2008, 2007, which is why people are comparing it. I can see the comparables. The people think I'm just one-sided on the markets. I'm not. I pride myself on being able to look at both sides of the argument, understand both sides of the argument, and then pick a side. And the side that I'm on is the bull side for crypto. US equity market, we've already said it. That's a hard market for me to work out. I'm not an expert on the US equity market at all. I don't really trade it. I own a couple of stocks, some mining stocks, and looking to get more crypto-related stocks. But I'm generally not, a massive connoisseur of the equity market. Second, they said inflation is transitory. Then inflation hit a 40-year high, near 10%. UK, by the way, is still ridiculous in terms of inflation. UK is a joke. We've already said that, but where isn't in this sort of day and age? There are certain places, lots of people moving to Singapore and other places like this. Anyway. Third, they said disinflation began, then inflation increased, and has been at 5+% for 23 straight months. Yesterday, the Fed said the banking system is sound. Today, the regional banks stocks hit a 2-year low, with multiple banks down 40+%. The last 2 years have destroyed the Fed's credibility. The Fed should have never had any credibility to start with, guys. And of course, this is non-farm payroll that we've got coming up. This is going to impact things. Are they going to continue to tighten rates in a situation where the banks are getting hammered? Doesn't seem like they will do that. Jerome Powell's got forward guidance was we're going to see how the landscape goes. Not we're going to commit to more rates. And he did say we'll do them if needed. and if needed means higher inflation than expected, and it means if the labour market stays strong and there's a kind of controlling of the contagion that's going on. Then that would be good conditions, I think, for them to continue to raise rates. I think they won't continue to raise rates if this banking issue continues, if you see a weaker labour market, which is why this is so important, and if inflation is anything even close to the true inflationary stats for next year. What are you going to do if that inflationary figure comes out? So it's very interesting what's going on. I was going to play this clip with Hugh Henry, but hopefully I can ask him in person if he decides to come on the show. We'll see. And that's really the bulk of what I've got for you. You know, it's huge week of data. It's a huge week next week of data. Just moving forwards to next week. When have we got the CPI? F1, we've got members. I think it's the 10th. Yeah, US CPI, month on month and year on year. So there's no real expectations. Although that doesn't look great. The month on month. But we'll see closer to the time. So it's going to be interesting. Ultimately, you know, we've got a long view on the crypto space, short view on the dollar, and long view on gold. Equities, mixed bag, I think. You do look rather similar to what you did over here. However, I really do hate comparing prior price action to where we currently are, but it's just a scenario that you could see play out. We'll see, you know. Going back to 25k would mean pain for altcoins, certainly. Bitcoin, not so much. But I still think that confirms the bull case to us with a retest, gives you a second chance if you've not already had one. I think altcoins are at great prices now, if I'm being honest. But you don't have to, you know, providing that you hold, in my opinion, the 26,980 level. I think you could be looking and are set almost for upside continuation. Coinbase also gave their earnings. It was pretty good across the board, better than expected. Net revenue was up 22% quarter on quarter. In subscription services, revenue up 28%. Transactions up 16%. Assets on platform up 62%. Revenue is 5.3 billion. Coinbase stock's an interesting one. Decrease in Q on Q total opening operating expenses. Across the board, it was pretty good. So that's really all I've got for you guys. Hopefully that's giving you everything you need in your morning, afternoon, or evening to help you navigate the treacherous waters of the cryptocurrency market. If you are interested in joining my Patreon and getting on board with me in a community, there is a link in the description. It's entirely up to you whether you want to do that or not. On that note, I'm going to love and leave you a like and a comment is always appreciated, and I'll see you in the next YouTube video. Thanks a lot for watching. This video will be coming out half an hour before the non-farm payroll, and you know what to expect and what the markets are going to do in regards to that. All I've got for you in this video, guys. You enjoyed the content. A like is appreciated as a comment. See you in the next one.